All right, traders, a very warm welcome. I'm Devang Mehra from the Financial Analyst, and I'm here to talk about the markets. And we're in a very tricky situation, and I would say it's a make or break for our Indian markets. I want to talk about a lot of things today. It's going to be a little bit long video, so watch it when you're free. So what I'll do is the first half, or I would say 5 minutes, would be for intraday trading. What we can expect for Nifty Bank tomorrow, which is Monday, April 12th. And the second half of the video is going to be on the longer term perspective. What am I expecting this week, in the coming week, and what is my plan for my investments going forward in the markets, which I feel is a much more important question to answer right now. Is Nifty Bank heading towards 30,000, 29,000? Or are we heading back towards 34, 35,000? Is Nifty heading towards 14,000 or are we heading 15,000 plus? These are the questions that we need to answer, because I think, it's fine. Intraday opportunities, we see these opportunities, spot these opportunities, but these longer term trends are very, very equally important, because if we know these longer term movements, we can plan our intraday movements accordingly. So before we get started, humble request, guys, click on that like button, comment on this video if you are part of the family, and don't forget to subscribe if you're new. So the disclaimer is always there before I start. There are tons of people who are much better, much more knowledgeable than me. So it's totally up to you who you follow. But humble request is, whoever you follow in the markets, please use your own risk reward. Please use your own analysis, and please always consult your advisors and do not follow anyone blindly. Another request to each and every one of you is, please stop playing weekly expiries, guys. Options are there to bankrupt you, and it's the weekly expiry people who get bankrupt, because the movement has been so massive. Volatility, on the bank Nifty has been massive. So if you play out the money, it's going to become deep out the money if you're unlucky. So try to avoid the out the money, at the money options. Try to always play in the money, and try for the monthly expiries or always the next week expiries. That's the second suggestion. Now, coming back to the video, first of all, intraday view Nifty. Guys, understand Nifty is stuck in a range. We are in this range right now. I'm going to give you a very small range. It is between 14,970 and the low of yesterday, which is 14,780. I would say, I would understand that as long as we are in this range, I would advise everyone to have do not aggressively play on the intraday basis, because we are still on a longer term consolidation. Let's go above 15,000, become aggressive buyers, or let's come below 14. I would say 14,780 as well. If you come below 14,780, you can start to sell again in the market. I think that is another area that you could try to do. But I would say, if you are in this range of the last Thursday and Friday, please try to be less active on the intraday side and forget about the markets for a day or two. That's the best advice I can give you. Now, let's talk about where the markets can open and what markets would actually do. One very interesting thing I saw on the RSI while I was fidgeting with the RSI on Friday. I'm going to show that to you. The RSI on the daily chart was consolidating, and the RSI is just yesterday, a couple of days back, given a sort of a breakout, right? We've got some kind of a breakout on the RSI, but still it's around the 50 level. So it can't be regarded as a very strong breakout, because 40 to 60 is a consolidation range. But just an observation that I saw, are we heading towards 15,000? I don't know. So what's bothering me right now? That's the question you need to understand. I think on one side we have COVID, the resurgence of COVID, and I'm going to read out some updates for you that have come from Maharashtra. The overhang on lockdown. What's the case coming like? So the update that came at 9 p.m. today was that the appropriate decision on the lockdown in Maharashtra will be taken after 14th April. That's the statement that the health minister Adesh Tope has come up with, because there is still a couple of officials that they have to speak to, and I think a majority of the people today in the COVID task force are inclined towards a lockdown. So is it an 8-day lockdown, 12-day, 15-day? That is something they don't know. So let's see what happens. Let's hope for the best. And the lockdown will damage our economy, damage the jobs of a lot of people. But health is wealth, right? Health is the most important thing. But let's see how things go. So today, no decision has been taken. That's something we have to understand. Last Sunday, if you all remember, the weekend lockdown was imposed in Maharashtra. And after that, on Monday, markets plunged about 400 points intraday. Bank Nifty was 1,500 points intraday. So don't forget that point. We could get a knee-jerk reaction even tomorrow in the markets, and that because this is the news that has been on everyone's mind. So let's see how markets react to this news. The data has not been very well. FIs have also been sellers in the cash market. So I think in the first half tomorrow, we should witness some selling pressure. But I'm also of the opinion that over the coming days, we should again recover and come back to where we are right now. That's a assumption that I'm going with. My positions will be planned accordingly. And another update I got at 9:15 was that Maharashtra reported the largest jump in COVID in a day, which was 63,000 cases. So Maharashtra has been on the poor side. So this is one side. The negative news is COVID. That's what has been on everyone's mind. However, we also have something on the bright side, which is the IT results coming, the quarter 4 result season coming up. And I'm telling you right now, the IT companies are going to post fabulous earnings. The last quarter, it was, I think, the best earnings they saw in 10 quarters. I will not be surprised if this time it's the best earnings in 15 quarters. IT is going to post fabulous earnings, you like it or not. Why do I say that? Because you can see it from the charts. Let me open Infi. I think it'll be much more clear when I tell you the charts of Infi. See, what happens is in IT companies, I'll be very, very simple with you. See, in IT companies, if the results are to be good, this is called discounting of the information. There was no news in the IT companies. Also, by the way, Infosys has announced buyback. So whenever a buyback is announced in the initial stages, the markets really move up. But when the buyback is actually into force, then the markets plunge of that particular stock. So this over here is called discounting of the information. Before the results are coming out on Wednesday, markets have already discounted them. And when their results actually come out, markets try to book the profits. Because people like us who are retailers, we enter at the top, whereas the FIIs accumulate at the bottom. So when they distribute, we accumulate. That's always the double whammy of stock markets. So you can see what happens on the IT companies whenever earnings come. This is very, very important. Whenever IT companies post earnings, it always plunges after that, because 90% of the people enter into IT stocks on the day of earnings and they always make a loss. I'll show you the data also of the last 1 year so you can understand. This was 8th of January when the quarter 3 results were to be out. You can see before the earnings, IT surged, but as soon as the earnings were announced, it plunged. The same is the case with any IT company. You can see this example also, the quarter 2 earnings. Before the earning, it was a wonderful earnings. IT stock surged, but when the earnings came, it plunged. So my suggestion would be, please do not enter into longs on the IT after the earnings are released, because you will get a gap up, but it will be sold into because everyone will start to book profit. That's something I want to say. This is one last example. Before the results, IT companies surged, but as soon as results, you got a gap up, but sold into consolidation. So just keep that point in mind when you trade IT companies over the coming week. So COVID on one side, at the same time, IT earning on the other side. And I believe markets need a trigger. They need a trigger. They really need a trigger. Why am I saying that? Is because if you look at the global markets, they are at all-time highs. Last time when these COVID lockdowns happened, it's also happened in France right now, right? And there is no sense of fear in France in the markets. There's no sense of fear in France. It's already surging at all-time highs. If you look at Germany, it's already at all-time highs. If you look at UK, it's already at all-time highs. If you look at S&P, it just gave you a new all-time high, surged with a Marubozu on the daily chart. If you look at Nasdaq, Dow Jones again broke the wedge, again at all-time highs. If you look at Nasdaq, it's also around the all-time highs. So why are we having a very big divergence with respect to these global markets? That is one question that we need to answer. Why is Indian markets the only market which is at the bottom, which is performing very poorly, and why are all the other markets on the top? Because see, last time when these lockdowns happened, when the first time it happened, people were surprised. There were no alternatives. But now when the lockdowns are happening, people know what to expect out of them. There are vaccinations going on. I would always say there's an improvement going on. So we are getting these knee-jerk reactions in the market, but will they sustain? Because right now, all the global markets, they are resilient and they are sustaining. They are sustaining at the highs. It's the only in the Indian markets that are underperforming. So that is something that we need to see and we need to observe in the coming days. My understanding if you ask me what's my understanding would be, this correction that has happened, this consolidation that has happened. I believe this is discounting the lockdown coming in. I believe this is discounting the bond yield, the bond yields coming in, the surge in the bond yields. I think already a lot of this has been discounted. And if you think Nifty is going to plunge 1,000 2,000 points further, I don't think that's going to happen. Personally, I could be wrong, but I don't think that's going to happen. It's very minutely possible. We could see intraday huge volatility, but I think they will be bought into. That's what I think. So I'm not feeling very comfortable if you ask me to short the market on positional basis. When we had to short the market, this was the time. If you look at the charts, you all remember when I took Axis short somewhere over here, 34,000. So if you ask me to short the market at lows, I feel quite uncomfortable. However, I would like to go short on the markets if I get them at a higher level, something like a 15,200 on Nifty. But if you ask me to short the markets right now, intraday is fine. Again, I'm not saying intraday. You could again scalp 15, 15, or 60 points on intraday basis. I'm totally fine with that. But on a positional basis, going really, really further down, that really concerns me. So which brings me to my intraday view. See, on the intraday chart, we have been consolidating and hitting this level of 14,800 again and again. This level has been coming again and again. So precisely 14,780 to 14,800. And it's already been tested multiple times. And also you can see a descending kind of a triangle being formed on the intraday charts. So what is my view? So if you are getting a flattish opening, or if you're getting a gap downish opening, and in the first 30 minutes markets, I think they will go below this. It's a big possibility. So then you could take some puts home, you could take some puts, you could take some shorts in the market. The first target, I would believe, would be something like a 14,640. I think this could be the first target, because below these levels, we don't have any concrete level below that. So we would get a next support at 14,640. But I would go short in the market only if I am falling down in the first 30, 40 minutes. So if the markets do not fall, so something like this, if the markets do not fall or they open gap up, I will become hesitant on the short side. Number one. Number two, if the markets, let's say, opens gap up, right? This would mean that, what does that mean? This would mean that there is still positivity, there is still hope. That's what it means. And I always like to be hopeful in the markets. So my understanding then would be, yes, if you are in some BTST calls or Nifty Bank Nifty, I would say exit them once, because I think we'll again come down and test these lows of the last Friday. And then we could maybe then go up further. We could have a volatile trade. So from this point right now, I don't see any breakout happening on the upside. It could happen. Let's see about that. We have to see in the live market. But I do think even if we open gap up, some kind of negativity should come in the market till 11 o'clock in the afternoon, 12 o'clock in the afternoon. And maybe in the second half, when the UK markets open, we might follow the trend and try to recover some losses in the suffered in the first half. That's my view about Nifty. Talking about Bank Nifty, it's a similar view on the similar lines. 32,400. This level has been quite poor, and you've heard all of us say it again and again. No matter how high we go, we're already getting rejected and coming to this level of 32,400 again and again. So, and also you can see in the last couple of minutes, we have consolidated, build it up here. It's like a short build up happening. So this would follow through when? This would follow through if you get a flat opening or a gap down opening. So if that happens on Bank Nifty as well, I think we should go short on Bank Nifty. First target could be 32,000, right? Because we have no level below this. We've tested this level multiple times. So we will go short if in the first 30 minutes some kind of a sell-off comes, because the news is there. And if the sell-off has to come, it will happen fast. And it's going to be furious, because we are in a bull market, and the bull market dips are fast and furious. So if the sell-off happens, it's going to happen in the first 15, 30 minutes. It's going to be a wild sell-off. So be careful what you want to do. If you're in the longs, be careful. I've already given my view right now in the market. So below 33,400, 32,400, we should expect something like a 32,000. That's a big round number. We'll see how markets react there, and then maybe we could go down further also. But again, if you open gap up, then you can expect a volatile trade, maybe coming down in the first half, and then, recovering the gains, and we'll see how price action goes down further. If you get a big gap down, it's going to be a no trade zone for me. Why? Because already the profits have been made overnight. So if we get a big gap down tomorrow in the markets, I will not be very interested to trade. Even if you trade, advice would be trade very small quantities so that the loss is limited. This is the intraday view going forward for Nifty and Bank Nifty on Monday. Now let's come to the bigger perspective, right? Let's forget about intraday for now. I think uh, I wanted to cover the intraday view because 50% of the people are intraday people who watch my videos, but the rest of you are investors and who want a bigger picture to adjust your portfolios. So if I ask you what's been underperforming, it's been banking and finance. Banking and finance have been underperforming, and I think all the other sectors are doing really well. IT has been doing exceptionally well. We don't see any negativity coming in IT. It's already at all-time highs. We see metals at the all-time highs. A great 10-year commodity breakout has already have happened in metals in the world. In the world. So I think metals should continue gains even after. So please do not try to sell metals. I would suggest go buy on dip on metals. So find a dip, buy metals. I think this trend will continue even for the future. Pharma is also doing extremely well. We have got a good breakout on the pharma index. We gave you a good couple of trades on pharma, Glenmark, Sun Pharma. I hope you all have made some money on that. So pharma is also doing well. So these three are doing good. FMCG is also doing good. So basically, IT doing well, FMCG doing well, metal doing well, pharma doing well. I think auto is lagging behind. I think we should not trade heavily on auto unless until we go above 10,100 or 10,200. Let's take 10,200 on the safer side, which is a 300-point jump from here. So I think once we break 10,300, we should go on the higher side on the auto index. But right now it's in a no trade zone for me. Now the question is banking and finance and Reliance. This is the question now left, because eventually banking and finance and Reliance are about 50% of Nifty, 45% of Nifty. And whatever these guys do, Nifty is going to follow. So first, let's talk about Reliance. And, Reliance is still in that range. I've already told you Reliance needs to break out. Himalayas told you it needs to go out. Reliance right now is in this consolidation. And whichever side this breaks, Nifty is going to follow. I would say below 1960, we're short on Reliance, and below 2050, we are long on Reliance. But in this range, we do not have any room for trading. Please do not randomly trade Reliance 15-minute chart. I don't think it's going to make some sense. Below 1960, we have a level of 1920 followed by 1900. These can be targets on the short side. So right now we're at 1980. If you want a short Reliance tomorrow, it's obvious it should not open gap up. If Reliance, let's say, opens gap down somewhere close to 1970, then it could give a further fall, which basically complements our analysis that Bank Nifty and Nifty could also fall down further. So Reliance is not looking very comfortable. Now, I want to ask you something. We've seen a very big sell-off happen in banking stocks. Let me hide all these levels that I don't think, okay, let them be. So, we've got a very good sell-off in the banking stocks, and we're already at lows. I want to tell you something. Again, all these points I make are going to be my personal views, right? I could be wrong. I have the reserve the right to be wrong, but this is how I think. My understanding is that we should touch 34,000 before we touch 30,000. This is what I think. Why am I saying this? I think some kind of a pullback is required. Number one, we also could be bottoming out of the backs. I want to ask you something. What's the problem with us retailers? The problem with us retailers is there is always some news which tells us, which always tells us to go short. Think about what I'm trying to say is think about 21 December. Did you see this entire candle? So such a big candle. Did anyone over here think to go long in the market? No one. Everyone became short here. And what happened? Absolute stunning rally. Look at this area over here, 29 Jan. You could see a clear breakdown that happened on the market. Did anyone think to go long here? It was a complete breakdown. But still markets rallied. Yes, there was an event. Yes, there was a trigger. Yes, we need a trigger right now. What I'm trying to say is, when things go bad, everyone becomes bearish. And the problem is we don't become bearish from the top when things are getting bad. We become bearish or bullish when the things come in the newspapers. So tomorrow news comes that we are getting a lockdown. We should have become bearish from the top, but we become bearish on the bottom. And the bottom is actually nothing but a ground where FIIs, institutions are accumulating. And it's people like us who try to go short in the market. And what exactly happens? Hasn't COVID already taught you a lesson? No matter how bad things are, you recover like a beast. You can see big falls in September. We saw big falls in October, November. We saw big falls every month in COVID. but they got recovered like a beast. So don't you think that could also be a possibility now in conjunction with the global markets? It could be. So my understanding would be, now complementing this thing, my understanding is, 10% fall. I want to talk something very sensible, and we'll see how things are. My plan is that in this week I'm going to focus less on intraday trading, and I'm going to focus more on accumulating banking sector for my positional portfolio, long term portfolio, because I think I'm getting a good discount on these companies. When you get discounts on clothing, on Amazon, whatever, on the brick and mortar stores, 20% off on these stores, you go mad, you go nuts and buy those things. Right now we're getting a 20% stock discount on Bank Nifty. I think it's an attractive price to go long. Couple of reasons. Number one, most of mutual funds, I'm again have a random mutual fund open, I have no affiliation with them, Access Blue Chip. Let's talk about this fund right now. If you see the holdings as on 31st March, you can see that the 30% allocation of any portfolio, or much more than that, is always towards banking and finance. See this HDFC Bank, they have around the 9% of the 9%, okay, holding in HDFC Bank. Bajaj Finance, it's a 8%, that's around 17%. They have Kotak Mahindra Bank, which comes to 24%. They have Reliance, they have HDFC, they have ICICI Bank. So coupled all of them, they come up to 40-45%. Reliance also. What I'm trying to say is banking and finance is something that most of mutual funds hold, most of FIRs, DIs, etc. hold. And in America, there's a saying that when the 10% fall comes, it's called a correction. It's called a healthy dip. When a 15% fall comes from the highs, it's called a larger kind of a correction, a larger pullback. But when a 20% fall comes from the all-time highs, that's called a start of a bear market. What I'm trying to say is when a 20% fall comes from the all-time highs in a particular stock or in a particular sector, that is called that the stock or that sector becomes bearish. But unless that 20% mark is sustained, you do not become bearish. You still are a buy on dip market. I hope that point is clear. So what I have done is, number one, I am of the view that the mutual funds, they have started getting good inflows. SRPs have started coming back in actions. Mutual fund again saw net buying after, I think, 9-10 months, since the last year. So I think they will start to top up and average out banks because they are getting them at very, very discounted prices. Number one. Number two, let's calculate what's the dip that we've seen on the markets. This is the all-time high of Bank Nifty, 37,700. Let's find out what's the dip like right now. So currently we've got around a 15% dip on Bank Nifty, which tells me that a 20% dip is the maximum I can expect. I do not expect Nifty Bank to be bearish. So what's the 20% level coming up to? The 20% level, it comes up to this area over here, which is around 30,000. Let's take a round number. So in my view, 30,200 could be like the bottom if things get really bad, because below 30,000 you become a sell on rise on Nifty Bank, and that's a big thing. That's a very, very big thing. So I think I'm the only person right now on YouTube who's telling everyone to buy banks, but I think if the risk reward is attractive. So what is my strategy over here? My strategy over here is, let's say I want to buy ICICI Bank and I want to invest 2 lakh in ICICI Bank, for example. So what I will be doing is investing 1 lakh in this week. And if I get a further 5% fall, I'm going to buy 50,000 more. If I get a further 5% fall, I'm going to invest 50,000 more. So I'm going to invest my budget in banks in tranches. Never will I invest the entire amount in one go. There's a very simple reason being we're already down 20% on the individual stocks in banks. So I don't think 30% fall is going to come. Let's analyze. HDFC Bank, what's the fall been in HDFC Bank? Let's start off with the stocks because we need to know what could be the potential bottom of these companies. So HDFC Bank right now, the top was somewhere here, 1640. And currently we are standing at a good 14% correction on the HDFC Bank. So right now we could go down further. We could probably go down quite further, which is 1300 levels. This level could also come on the screen. That is where things get really, really bad. So let's forget about HDFC Bank. Let's talk about ICICI Bank. ICICI Bank has really, really fallen a lot. Let's see how much it has fallen from the highs from 680. What's the correction in ICICI Bank been like? So ICICI Bank has already corrected about around 18%. Right? Yeah, it's already corrected about 18%. So following that 20% rule, only 2% fall further could come. And if that fall comes tomorrow on that knee-jerk reaction, I want to be a good buyer in the banks. I want to be a good buyer on the bank. So ICICI also is at a very, very crucial retest level. And if this thing, what I'm trying to say, comes into force, you should start to see good buying in the banks. What could be the trigger like? The trigger, I think, could be TCS earnings. If that is not a good trigger, I think HDFC Bank earning could be a really, really good trigger, because HDFC Bank never posts poor results. I've never seen it post poor results in the last couple of years. So I think once that comes out, positivity will come in. This COVID overhang should subside. That could be a very big trigger. But again, I'm not telling you to go long on intraday basis. I'm again and again saying, don't go long on intraday basis. We are talking about positional views. Let's look at Axis Bank. Axis Bank, if I find out the levels from the highs, 800 rupees, we've already fallen roughly around 17% in Axis Bank, which tells me only a 3% room is left on Axis Bank to fall down further maximum. So yes, tomorrow a fall in Bank Nifty could come, but this is the statistics that I'm seeing on the screen right now. Kotak is doing fine. I think Kotak has a very, very strong trend line, and right now Kotak is the strongest bank. So if markets do not want to plunge further, I think Kotak really needs to hold Bank Nifty. It's not fallen down, not 13%. SBI is another bank which has really, really underperformed from the highs. I think 18 to 19% roughly. So around, 19% fall already has happened on SBI. So they do become attractive bets to me. IndusInd Bank has also underperformed, and we have broken our crucial levels. We are again coming back towards 18% fall, 18.5% fall on IndusInd Bank. So there is pressure. Bajaj Finance. Let's talk about Bajaj Finance for a second. Why leave Bajaj Finance and HDFC? Bajaj Finance is also coming to a really, really important level, 4,700. Yes, it's given you an intraday breakdown again after again, but you know how Bajaj Finance performs, because when everyone becomes bearish, that's the time when the accumulation happens and the stocks surge. And they are stocks, when a trigger happens, they surge and they go nuts. We know those things. So Bajaj Finance, from the all-time highs of 1,500, it's already plunged roughly about 17%, 17.5%, which tells me that the maximum correction we could see is this level of 4,600. That's the level I'm going to come in if I get that level for sure. For sure. HDFC, because that's another very, very important constituent. This I think is around 15, 14%, but currently it's already corrected. Yeah, 17% again. So what I'm trying to say is, let's look for the 20% mark. That could be the bottom of the markets. That could be the bottom of this banking and finance issue. And spend less time on intraday. That's what I could say. The volatility is massive now on the Bank Nifty especially. So my focus this week, as I said, is going to be on banking and finance. On the stronger side, intraday, what can you look at? FMCG, pharma, IT. I've always been telling you. So these guys look very strong on the upside. Even on the intraday basis, you could always find some good opportunities there. So this is what I think, guys. Let me know what you think on that, and I will keep you updated how things are going. But be careful. This is the markets. This is a place where money transfers from the impatient to the patient. So always have a good calculated risk that you take. And if you do a loss, cut it out immediately. Enter into a position that's worth your time, worth your money. That's about it for now, guys. I hope you enjoyed the video. Thank you so much.